The story of Opendoor keeps getting more fascinating by the day. We've been following this company closely over the past couple of weeks, and what we're seeing now is a setup that has all the ingredients of a classic short squeeze play layered on top of a genuine long-term transformation story. The market, the short sellers, and the retail investors are all converging on this stock in a way that makes it feel almost like a generational trade. To understand why so many people are buzzing about Opendoor this weekend, you need to start with the numbers. Right now, short interest in the stock sits at around 24% of the float. That means nearly a quarter of all the shares that are actually available to trade are borrowed and sold short by investors who are betting on the company's collapse or at least a major pullback. 24% is not just high, it's extreme. By comparison, most stable large-cap stocks might have 2 or 3% short interest, maybe 5 or 6% if the bears are circling. When you get above 20%, you are in danger zone territory for short sellers. It means they are heavily committed, and if the stock starts to move in the opposite direction, their positions can quickly become untenable. Now, let's put that against what has actually happened in the stock over the last week. We saw a staggering 80% rally on Thursday alone after the board reshuffle news. That move wasn't built on thin air. It came after the company announced a new CEO, Kaz Nejatian, who brings with him a Shopify pedigree and a real AI-driven vision for where Opendoor can go. At the same time, co-founders Keith Rabois and Eric Wu returned to the board, injecting what's been called founder DNA back into the business. And on top of that, we got confirmation of $40 million in new investment from Khosla Ventures and Wu personally. That's not speculation. That's hard capital coming in alongside leadership changes that signal a major new chapter. So you've got high short interest colliding with real bullish catalysts. And that's the spark that sets up a potential short squeeze. When a stock rallies as sharply as Opendoor did, shorts are immediately under pressure. If they hold their positions, they're staring at mounting losses. If they try to cover by buying back shares, that very act of buying pushes the price up further. It becomes a feedback loop where each uptick causes more shorts to throw in the towel, fueling even higher prices. That's the classic squeeze dynamic. We've seen this story play out before with meme stocks like GameStop and AMC. But the crucial difference here is that Opendoor is not just some distressed retailer on the brink of bankruptcy. This is a company with $1 billion+ revenue base, operating across dozens of markets, and now actively pivoting into an AI-first technology platform under the leadership of serious operators. So while some people may want to lump this into the meme stock bucket, the underlying fundamentals tell a very different story. And that's where the Open Army comes in. This growing grassroots community of retail investors has made Opendoor their rallying cry. They're loud, they're coordinated, and they're relentless. They're not just tweeting memes or throwing slogans around. They're buying shares, they're holding, and they're amplifying the vision of what this company can become. When you have that kind of passion meeting this kind of short interest, you get a setup where the bears are playing a very dangerous game. Eric Jackson, probably the most vocal champion of Opendoor right now, has been hammering this message home. He's said it again and again, the focus isn't just on squeezing shorts for a quick pop. The focus is on the long-term vision of Opendoor becoming the Amazon of real estate, a platform that makes buying and selling homes as simple as clicking a button. But even he admits that if shorts get burned along the way, that's just fuel for the movement. And you can see how it's playing out. Jackson himself has disclosed that his cost basis is around 71 cents per share. Think about that for a moment. He's sitting on a position that has already multiplied more than 10 times in value, and yet is not selling. He's holding with a target of $82 a share. That conviction sends a powerful message to other retail investors. The shorts, meanwhile, are clinging to their narrative that this is just another overhyped housing play that will collapse when reality sets in. But reality is shifting under their feet. The Fed looks poised to cut rates next week, which would lower mortgage costs and inject fresh momentum into the housing market. That alone could remove one of the key bear arguments against Opendoor. And then you've got the return of leadership with vision, a clear commitment to AI transformation, and fresh capital being injected by some of the smartest venture investors out there. The more you line up the pieces, the more it looks like the shorts are betting against a company that is actively rewriting its own future. Now, let's talk about what a squeeze could actually look like here. The stock is already up massively in the past week, moving from the mid-single digits to above $10 in a matter of days. If shorts start to panic cover in size, it's not out of the question that we could see another explosive leg higher. This isn't to say it goes straight to $50 overnight, but it's very possible to see double digits sustained and then built upon over time. Remember, Once a squeeze dynamic takes hold, it's not just about fundamentals. It's about momentum, psychology, and raw buying pressure. And right now, the Open Army has the psychology edge. They believe they're in the early stages of something generational. You also have to remember that short interest doesn't just vanish because the stock price moves. Shorts have to actively unwind their trades. And given the sheer size of the short position, it's not like they can all exit at once. Every exit pushes the price higher, and every move higher forces the remaining shorts into a deeper hole. That's why the risk-reward is so asymmetrical for them right now. They're capped at 100% upside if the stock went to zero, but they're exposed to unlimited losses if the stock keeps rising. And Opendoor has already proven that it can rise fast and furious. For long-term believers, this is where conviction gets tested. Yes, there will be volatility. Yes, we'll see profit-taking days like Friday, where the stock pulled back after that monster Thursday rally. That's natural. You don't get straight lines in the market. But the key is recognizing that consolidation is healthy. A base in the $9 range after near doubling is actually a very strong signal. It suggests that this isn't just a flash in the pan pump. It's a revaluation of the company based on new leadership, a refreshed board, and a clear strategy forward. And let's not forget the symbolism of what's happening here. This isn't just about stock charts and percentages. This is about a retail movement taking on entrenched Wall Street skepticism and saying, we see the future differently. We believe in the power of platform businesses. We believe AI can reshape real estate. We believe founder DNA matters. And we're willing to put our money where our mouths are. That kind of passion doesn't show up in spreadsheets, but it absolutely shows up in market behavior. So where does that leave us heading into the weekend? To me, the story is simple. Shorts are on notice. They've been emboldened by years of skepticism around Opendoor's model, but the game has changed. With Kaz Nejatian stepping in as CEO, with Rabois and Wu back on the board, with new capital flowing in, and with the retail community galvanized like never before, the thesis for betting against this stock looks weaker by the day. Every dip is being bought. Every piece of news is adding to the sense of momentum. And every short that hangs on risks becoming the next forced buyer. Does that mean Opendoor is guaranteed to skyrocket straight to Jackson's $82 target in a straight line? Of course not. There will be bumps along the way. But what we're witnessing now is the foundation of a potential short squeeze in the making, layered on top of a company that has real fundamentals and a clear path to transformation. That's a rare combination. As investors, it's worth stepping back and asking ourselves, when was the last time we saw this kind of alignment? A massive short position. A newly energized leadership team. A retail community that refuses to back down. And macro conditions that could deliver a major tailwind in the form of rate cuts. That's not just noise. That's a setup. And it's the kind of setup that can create life-changing moves in a stock. So as we head into the weekend, the message is clear. The Open Army is in this for the long haul, and they're not just here to make a quick buck. They're here to be part of a company's rebirth, to ride a movement that could reshape an entire industry. The shorts, meanwhile, are betting against all of that. And if history is any guide, betting against passion, vision, and momentum rarely ends well. That's the update for today. Stay tuned, stay sharp, and remember that what we're seeing with Opendoor isn't just about trading. It's about transformation. It's about conviction. And it's about the power of people believing in a vision strong enough to take on the doubters head on. This story is just beginning, and the next chapters could be even more explosive than what we've already seen.